Starting the session in Zoom.
Recording in progress.
Good evening, everyone. Welcome to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing tonight's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to thank you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small amount of percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. To better understand also what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is truckers, trades, and blue collar. 5 tips to minimize tax expense. And the tax expert for today's session is Jared Smouth. Jared has been a CPA for over 18 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, information technology, management, pension, tax, and other services. He is a firm believer that taxes are important for our government to function. However, he does not believe we should be paying any more than we should and enjoys helping his clients find ways to optimize their tax situation. And with that said, introducing Jared Smith.
Good evening, everybody. Appreciate you joining us tonight. You'll notice the name of the session was 5 tips. I removed 5 from my slides because I have more than 5. But if I tell you I have 50 or 100 tips, you'll probably lose your attention. But I don't have that many, but I have more than 5. Again, my name is Jared. This is my full name I have to use because it's on my CPA certificate. You don't need to call me by that, but I'm grateful to be here to help you. Before we get into the tips, though, one of the most important things we need to understand of being self-employed is the taxes that we have to pay, because they're one of the biggest surprises I see with individuals who start their own businesses are the taxes that they weren't aware of. Well, first of all, there's the self-employment tax. Being self-employed, you're both the employee and the employer. Now, when you're an employee and you have a W-2 job, you're used to having 7.65% of your income taken out of your paycheck for Social Security and Medicare. Because you are the employee and the employer, being self-employed, you pay that twice. So your employer, as a W-2 employee, also pays 7.65% on your behalf to the government. So we pay both of that. That's 15.3% right off the bat. You got to budget for, and it's not automatically deducted unless you are elected to be taxed as an S corp and you've set up payroll processes to do that. If you're a single member LLC, sole proprietor, and you're just paying cash, getting cash, and you're paying taxes at the end of the year, it's something you got to plan for and pay attention to. And then there's the ordinary income tax, that the tax brackets that we fall within. But something that's good about being self-employed is your net earnings or losses are added to your income. So if you have a loss, let's say you have a W-2 job and you have a side business on the side as you're growing your self-employed business, and you have a W-2 job on to help make ends meet, any losses you have can offset your W-2 earnings. Not that we want to have losses, but in the beginning years of growing the business, it's most likely we will. Then you also get to deduct 1/2 of the self-employment tax from your income. So 7.65, you take that away from the income that you have as a deduction. They don't tax you on that portion. And then if your business is a qualified business, most of them are, you also get to deduct 20% of your net self-employment earnings from that income. That was part of the Tax Cuts and Jobs Act. It's set to expire with tax year 2025. You get some benefits to kind of ease the tax burden. And again, one of the most important things is you need to pay attention to your total tax liability throughout the year, to estimate those and to pay the taxes quarterly, unless you like paying fees and penalties and interest for not paying enough throughout the year. So having said that, the purpose of my presentation is to help you appropriately reduce the amount of taxable income that you have. I want you to earn as much as you can, make as much as you can in your business, but you also want to make sure you are deducting everything you can so that you're not being taxed on more than you should be. So what are some of these deductions? When you first start up a business, there's things that you do before you even go live or have an opening. You have your upfront investments, anything money you spend on for market research and analysis. Let's say you want to open up a construction business, you want to open up a HVAC AC business. You want to figure out the market. Where is the best place to go? Where should I advertise? Where should I establish or build my business? That could cost money. There are companies out there that provide research for you if you pay them for it. You have organizational costs. If you engage an attorney to organize your company, your legal structure, you need to purchase stuff sometimes. A lot of us maybe work out of our home in the beginning, but if you have a lot of equipment, tools, working out of your home, garage may not be possible, and so you have to rent. You have to find places to store your equipment, and those are capital purchases. Planning and development prior to starting, if you can have employees, the cost of finding those employees and training them to get them all ready to be ready on day one, and then rental costs and equipment, machinery. Those could be ongoing. So these costs may be depreciated or amortized. Depreciation is something, you have a capital asset that meets certain thresholds. There are certain amounts you can deduct up front. There's certain amounts you need to depreciate over time. So it's basically you're expensing it over time. That's what depreciation means. And amortization is essentially the same concept, but it's not on, you don't have a tangible asset to attach it to. Depreciation is expensing an asset over time. Amortizing is expensing an expense over time, like legal costs and things. And the IRS has this concept that before you start your business, these costs, these upfront costs, may not necessarily be able to be expensed 100%. And so, because if you're forming your business, their expenses of the business, they want you to amortize it over a period of time that represents an acceptable period of time for the business. There's some complexity in that, so you can delve into the details later. Give me a call, send me an email, Google it, and you can understand the differences between those. Administrative costs. You have rent, you have your utility bills, you have your internet service, phone bills, office supplies, printing costs, website hosting, domain registration, software subscriptions, whatever you do to run your business administratively, pay attention to what you're paying and keep track of those. Another thing that I don't see very often, but I always ask my clients is certification, education, licensing. What are you spending on to keep yourself current with being able to do what you're doing? There's certain trades that you have to be certified in, you have to be licensed, and you spend money to get those licenses and be certified. Education, if you went to a trade school and you learned a trade and you went back or took some continuing education courses, those are important. You can deduct those. And possibly AOC is not the senator from New York. It is the American Opportunity Credit. It is and then LLC is Lifetime Learning Credit. They're credits that are available to taxpayers who have formal education. Certain institutions you need to qualify. If they receive federal funding, they would qualify. But you can get certain credits on your tax returns for education. The money you spend on education. Membership fees to trades organizations, unions, associations. I know some unions fees and dues are required. You don't have much of a choice, but you do have a choice to deduct them. Subscriptions to trade magazines. All these things are expenses that people may or may not realize they can expense, or they just don't think about it and they forget to include them. Advertising, client and service costs. If you have any registrations, I'm here in Arizona, we have the Home and Garden Show every year. In the big convention centers that people come out and advertise their business in different booths, things like that. Those are certainly costs of advertising your business. Travel expenses, if you're traveling for business, dining and entertainment expenses. In tax year 2022, as long as you dined and spent your money in a restaurant, it was 100%, and with clients and business purposes, it was 100% expensed. It's gone down to 50% now, and it was 50% before, but during certain period of time, they increased that 100% to help small businesses and to increase the revenue of small businesses and restaurants to boost their profits. Gifts that you give to your clients and use for your business to promote you, pens, cups, anything that you give away. Other expenses to consider: you have banking and credit card processing and financial services fees. You have interest on loans, tax return, financial software, portion of your housing costs. If you work out of your home, and you have a home office dedicated to your business, you can deduct a portion that represents the business use of your home. So let's say you have a 10,000 square foot home. That's a huge home. just using it for illustration purposes, and you have a thousand square foot home office, that's 10%. So the costs that you use, the costs that you have to run your home, you can deduct 10% of that for your home office. Professional services, you engage a lawyer for different things, an accountant like myself, or any other type of professional service, you can deduct those costs. Uniforms is another expense. A lot of people don't really realize that you have things that you need to do to perform your job. Uniforms, tools, whatever. And then one of the biggest things, especially if you're traveling around, and a lot of the trades have you traveling, you have mileage, you have gas, you could be either leasing or renting your vehicles, tires, insurance, anything to do with your vehicles. So the rule of the day, the most important thing to remember, if you're spending money to make money, it is most likely a deductible expense. So keep track of it, keep accurate records, use software. I know there's some trades that you may not be spending a lot, that may not have a lot of transactions, or using paying a subscription, monthly subscription to like QuickBooks or some other accounting software may not be feasible. But there are also some free software, online software programs out there. One of my clients uses Wave Apps. It's free. I really like it. It's simple. The most important thing is let technology keep track of your records for you. Doesn't mean you can neglect the technology, not visit it and look at it and review it. But at least you're not having to hand enter things and keep everything in the shoebox. So it's very important to keep accurate records and use software to make it easy for you. Very simple, short overview of deductions that you can take on your tax returns for your self-employed business. Happy to answer any questions now, and hopefully you found that useful.
All right, thank you, Jared. So we do have questions posted in Zoom. It's from Jake. His question is, will going on payroll for myself self help me reduce my taxes?
Yes, it can, and what it does is it helps reduce the self-employment tax. So when you're self-employed, the only way you can do that is if you elect to be taxed as an S corporation, where your income to yourself will be split between wages running through the payroll system and the distributions. The payroll system, you'll still pay 7.65. The company will pay the matching 7.65. So it's an expense of the company, but then the distributions come to you under taxed as ordinary income. The most important thing to be aware of here is what the IRS considers reasonable compensation. There's a lot of myths out there that it's 50-50, 20-80. If you're paying yourself something, they're okay, but the IRS is going to look at your distributions to yourself, your wages to yourself, and if you're not paying yourself what you would reasonably get in the industry, they're going to question it, because the IRS feels that this method has been abused by people to avoid paying self-employment taxes. Doesn't mean you have to take distributions or have to go through wages, but if you do, then they may question it.
All right, thank you for that answer, Jared. So the next question, this is posted anonymously. One of our attendee. I pay cash to many of my workers. Can I deduct this if I write them down?
Yes, absolutely. It doesn't matter how you pay your employees, contractors. If it's an expense, then keep track of it and you can deduct it. Now, what you also need to be concerned about is 1099 to the 1099s to these workers. Is when you show an expense of contract labor, but you don't have any 1099s that are being issued, that could be a red flag. That could be something that gets the IRS coming to knock on your door. So cash is not the issue. Whether you pay cash or you pay through debit card or you pay check, the method of payment is not the question. It's whether it's being reported.
All right. Thank you for that wonderful answer. Now, we have a question posted. This is through StreamYard, through private chat. Question is, can I pay my kids to work on some of my real estate rentals and deduct what I pay them as an expense?
That is a tricky question. I'm not going to get into all the details, but employing family members have some different rules that the IRS wants us to follow, depending upon their age. If they're under 18 years of age, technically you're supposed to pay them through payroll and issue a W-2, but you don't need to withhold taxes and things for them. I don't know if you have all the details here. If you want to shoot me an email or something, or do an do a Google search, do IRS paying family members self-employed, something like that. But there are some special things that the IRS requires, and that's the law. That's the ideal, the ultimate way we're supposed to handle it. But I have seen family members pay cash to their children and deduct it as contract expenses. And I'm not saying it's wrong, I'm not saying it's right. I'm just saying be prepared in case the IRS finds it and comes knocking on the door. And yeah, you can deduct. They're basically employees. You're paying them to do a job. It's not frowned upon to hire the family at all. It's just doing it right, recording it right.
Mhm.
Hopefully that answers your question.
Okay. Well, thank you, Jared. Now, we have our last question here through StreamYard. The question is, I deduct the cost of my truck for my plumbing work. Can I deduct the cost for my wife who works a couple hours a day for me?
When you say can I deduct the cost of my wife's, is it her
Wife,
vehicle? Wife's
yes.
vehicle, or okay. If she is traveling for doing business for you, yes, absolutely. Again, it's the business use of the vehicle. I'm assuming you are referring to her personal vehicle that she may be driving around doing business things for you. So you need to know, you need to keep track of the mileage that she has for running those errands, for conducting that business for you, as a percentage of the miles that she drives for the whole year for other things. So, for example, if she drives 10% of the time doing business, then the expenses related to that 10% is what she can deduct. And she can deduct, and the standard mileage deduction is usually the most beneficial for people, but you can also deduct the business use percentage of actual costs. And if you do your taxes yourself, the software will give you options, or if you have a CPA that you use, they can run both ways and tell you what's the most beneficial. But yes, you can. If your wife is helping you run your business, puts in time, and uses her vehicle for that, yes, you can.
All right. That's great. Thank you. Now, that is the last question for this session. Do you have anything else you want to say?
No, I appreciate again the time that you guys shared with me tonight. And, good luck. And being in the trades is a hard business sometimes. Yeah, I have a friend of mine who's He says, I wake up every morning unemployed. Being self-employed, you're always unemployed. I wake up every morning and go out and hustle and get the job done. So I admire everybody that puts in hard work and that does what they can to survive. So good luck out there.
All right. Well, that covers our questions. Thank you so much for tonight, Jared.
Thank you.
All right. Now, I want to thank you all for attending. Our commitment is to help you reduce your taxes and increase your wealth. We do this with the TriTax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join as a member today for as low as $19.95 per month. Thank you all for attending.